Hello and welcome to Crack CA Exams with us. That is the vertical of Unacademy, India's largest online learning platform that provides to you top educators, quality content, and overall a great learning experience. Crack CA Exams with us is a vertical of Unacademy that caters to the students of the CA Foundation and the intermediate and the final examination and helps them in their pursuit and journey of preparation for the CA Foundation, Intermediate and Final Examination. So I welcome each and every one of you to come. Let's crack CA exams with Unacademy, India's largest online learning platform. Welcome once again. Before we proceed, a little something about the educator today, that is me. Hello, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, an associate member of the Institute of Company Secretaries of India, and also a law graduate from Karnataka State Law University. I am currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting on my own, I worked with SR Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global, EY Global, in the Audit and Assurance Department, and EY India, Ernst & Young India, in the Mergers and Acquisition Department. Post this, I worked with the Manipal Group in Bangalore and was the corporate controller of their Indian entity, as well as the German subsidiary located in Frankfurt, Germany. It was when I got back from Frankfurt, Germany, that I decided to start something on my own. And here I am today in front of you, having this opportunity to address a fine gathering of young and aspiring chartered accountants like you. Thank you so much and welcome to my session once again. Please note at any point during my session, if you have any questions or any queries, any doubts, anything that you want to discuss about, please feel free to do so and do drop in a message here and I will reply to you as soon as I can. Before we start, let me just explain to you that Unacademy helps you in your preparation for the CA Foundation and the Intermediate examination through 3 channels. The first one is through YouTube channels. Then the second is in the form of special classes. And the third is the Plus platform. Now, YouTube classes are the ones you see right now where important topics of your syllabus are discussed with you and information is provided to you and help is provided in preparation of the preparation for the CA Foundation and the Intermediate course. The special classes are special classes conducted by renowned educators on important topics and very precise topics of your CA Foundation and Intermediate examinations. Special classes are located in the Unacademy Learning app, which you need to download on your phone, register on it using your OTP, more about which I will tell you in the following slides. And then we have the Plus. So please remember the YouTube and the special classes are absolutely free and you don't need to pay anything for those. YouTube classes are available on YouTube. Today you can go on to YouTube, type Prathik Gupta, Prathik, and you will get a list of sessions that I've taken on YouTube. You can go through them, access them, make use of them, and if you have a feedback, you can also let me know about the same. Similarly, for special classes, you have a lot of special classes of mine on the Unacademy Learning app, which I will be telling you in further slides. Now let's come to the most important point. The Plus platform of Unacademy is a payment-based subscription model, which provides you various subscription packages for the CA Foundation and Intermediate courses for you to choose from. So I personally recommend you and encourage you to become a part of the Plus platform because it simply helps you in accelerating and enhancing your preparation for the CA Foundation and Intermediate examination. Besides that, the 4 reasons why you should become part of the Plus platform of Unacademy are as follows. The first one, the Plus platform of Unacademy provides you daily live classes where you get to chat with your educator, engage in discussions, ask your doubts and answer polls. All this while the class is going on. Yes, you heard it right. All this while the class is going on. You do not need to wait for the end of the class. You do not need to mail them separately. You do not need to take an appointment or wait for a weekend. You can just simply raise your hand and ask the question whenever you want, and the educator will be more than happy in addressing your concern. It's as simple as that. The second reason why I recommend to you and encourage you to get onto the Plus platform of Unacademy is because the Plus platform of Unacademy, or the Plus courses on the Unacademy platform, conducts live tests and quizzes which help you to evaluate your preparation from time to time. And also the Plus courses on the Unacademy platform conduct regular mock tests and quizzes which help you get detailed analysis for your performance. Now, what happens through this? Detailed analysis of your performance and evaluate your preparation simply helps you in identifying your preparation levels in three baskets. One is your weakness, some areas that are of your weakness, some areas that you are not very strong at, and areas that you are strong at. So what it does, it helps you in deviation and channelizing your time by spending more time in areas you're weak at, little lesser time in areas which are not your so strong areas, and less time in your strong areas, thereby minimizing wastage of time and maximum utilization of the time available with you for the preparation of the CA Foundation and intermediate examinations. The third reason why the Plus platform of Unacademy is recommended to you is the courses provided on the Unacademy, the Plus platform of Unacademy are structured. We call it structured because they are completely in line with your exam syllabus to help you best prepare for it. So once you're done with a course on the Plus platform, you can rest assured that you have completed the syllabus for your examination without missing out any important or major points. And lastly and most importantly, the one subscription to the Unacademy Plus platform gives you unlimited access to the world of live and recorded courses of your favorite educators, your favorite topics, from the comfort of any devices. That means you can view those sessions from your mobile phone, your laptop, your tablet, or your desktop, wherever you are, whether you're on a holiday, whether you are at the office, whether you're on a bus, whether you're on a taxi, or whether you're sitting on the dining table and you have some time to spare. You can access it whenever you want, wherever you want. So that, I think, is one of the most important features of the Plus platform, because time is what is in constraint when you're preparing for the CA Foundation and intermediate exam, and time is what the Plus platform saves for you. Okay, so I really hope you get onto the Plus platform to enhance and accelerate your preparation for the CA Foundation and the intermediate examinations. Now, like I told you, 2 out of the 3 platforms where Unacademy helps you in your preparation for the CA Foundation and intermediate exams, one is on YouTube. Then you have your special class, and then you have your Plus. Now, YouTube is what you're watching right now. Now, special class and Plus are 2 sources that are provided to you on the Unacademy Learning app. So for those of you who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store, download the Unacademy Learning app, put in your mobile number and put the OTP that is sent to your mobile, and register on it. It's a very simple procedure. There's nothing complicated about it, and it takes maybe less than 2 minutes. So once you get onto the Unacademy Learning app, it opens your gateway to the world of courses, resources, content, live and recorded sessions of your favorite educator on your favorite topic, which will help you in accelerating and enhancing your preparation for the CA Foundation and intermediate examinations. Please remember, the special classes are absolutely free of cost and are available on the Unacademy Learning app. These special classes provide you immense knowledge and immense information about some very useful topics, which will help you in your preparation for the examination. The Plus course, like I said, is a payment-based subscription model, and more about which we will talk about in the remaining slides. So if for those of you who have got onto the Unacademy Learning app and are using it, I'm very sure you're satisfied with it and happy with it, and I thank you for the same and expect and request your support in the future as well. And for those of you who have not yet downloaded the Unacademy Learning app, I request you to download it immediately from your Play Store, put your mobile number, get an OTP and register on it using the same, and start using the resources provided to you by the Unacademy platform. Okay, so I hope to see you there, and after downloading it, if you have any question, you can always click on this button and ask for assistance, and they will be happy to help you. Next, like I told you, the Plus platform is a payment-based subscription model. The various packages for the CA Foundation and Intermediate subscription under the Plus platform of Unacademy are as follows. The packages are provided for a period of 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package will ordinarily cost you rupees 3,500. The 3 month package will cost you rupees 8,750. The 6 month package will cost you rupees 14,000. The 12 month package will cost you rupees 17,500, and the 24 months package will cost you rupees 21,000. Now, while you make a choice of your package, please do not forget to use the code Prathik to get a discount of 10% on your list price immediately. I repeat, Prathik, Prathik, to get a discount of 10% on the listed price. So the after discount price of the various packages are as follows. The 1 month package will cost you rupees 3150. The 3 month package will cost you rupees 7875. The 6 month package will cost you rupees 12,600. The 12 month package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see, immediately after using this code, you get a discount of 10% on the listed price. That's a lot of savings immediately. Now, I personally would recommend to you to go for the 12 months or the 24 months package because of the following reasons. Firstly, it is cost effective. If you see the per month cost of the 12 month and the 24 months package, it is almost less than 1/3 of the 1 month package. So that is a lot of savings immediately. And the second and the most important reason, as the CA Foundation and the Intermediate subscription is provided to you in one package, it makes sense for you to go for at least a 12 months because it normally takes about a year's time for you to prepare and clear the CA Foundation exams and the Intermediate examination. So if you're getting a package that lives through the entire duration of your course and also at a very cost-effective price, it makes sense for you to start off with at least the 12 months package, if not anything else. So while you make a choice of your package, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed price immediately. Prathik. Please take about 30 seconds, go through this slide, and in case you have any questions, please ask me. Yes, and one more important point, there is a no-cost EMI option available for the 6 months, 12 months and 24 months package. There is absolutely no additional cost on the EMI. So for those of you who do not want to pay the entire amount at one shot, you can avail this opportunity of getting a no-cost EMI on the 6 month, 12 months and 24 months subscription packages of the CA Foundation and Intermediate subscription. Okay, so I look forward to seeing you all on the Plus platform, as I'm also launching my Plus course very soon. So thank you so much, and I look forward to seeing you there. Okay, now the session that we're going to do today is the Negotiable Instruments Act 1881. Okay, part 2. Now this is part 2 because part 1 was taken by me a couple of days back on YouTube. So for those of you who have missed it, I request you to go to the YouTube channel Prathik Gupta, Prathik Gupta, and look for the Negotiable Instruments Act part 1 and go through it. It was a session for about 2.5 hours where the important concepts or important topics contained in this chapter were discussed, and today mostly we will have the concluding part of this chapter, the Negotiable Instruments Act 1881. Before I start off with today's session, I will obviously try to recap a little of what we did in the previous sessions, so you can quickly catch up on what's happening. But I will go a little faster on that because we've already done that in part 1, and that is available on YouTube, so you can always go there and think. But before I start, I would also like to tell you that on the Unacademy learning app, there are various special classes of mine that I've taken that will be of help to the CA Foundation and the CA Intermediate students. So I request all of you to go to the Unacademy learning app, type in Prathik Gupta, Prathik Gupta, and watch the many special classes that I have listed there for you. And please do give me a feedback, and any questions if you have, please do get in touch with me. I will be happy to help you out and answer your questions. I've taken various sessions on the Companies Act, Indian Contracts Act, Sale of Goods Act, Indian Partnership Act, LLP Act, Income Tax Act, Accounting, Depreciation, Basics of Communication. So yes, you can go through all those sessions and benefit from them, and also ask me any questions you have in case you have so. So let's start off with the Negotiable Instruments Act 1881 part 2. So all these things, what you see, the markings, that means these have been done in the previous session. So we will quickly recap this, and then we will go on to today's matter. The law relating to negotiable instruments is the law of commercial world, which is enacted to facilitate activities in trade and commerce. making provision of giving sanctity to the instruments of credit which be deemed to be convertible into money and easily passable from one person to the other. So quickly to explain this, it means the Negotiable Instrument Act came into existence due to the increase in trade and business between people where the need for credit arose. So negotiable instruments give the necessary credit to the world of business and trade, where the transactions cannot entirely happen on cash basis. So that's what resulted in the evolution of the Negotiable Instruments Act 1881. Okay, and like you can see, it's 1881. It's a rather old, a very old act. So the trade and business started way back then, and the need for credit transaction and credit facilities also started then. Okay, the source of Indian law relating to such instruments is admittedly in the English common law. It has been inspired by the English common law. The main objective of the act is to legalize the system by which instruments contemplated by it could pass from hand to hand by negotiation like others. Okay, so also this chapter will talk about transfer of negotiation instruments by one person to another by negotiation, just like how goods and services are. Okay. Then we go on to the recent development. Now, the most recently, the Act was amended several times. Recent 3 amendments made in the Negotiable Instrument Act were Negotiable Instruments Amendment and Miscellaneous Provisions Act 2002, and the Negotiable Instruments Amendment Act 2015, and Negotiable Instruments Amendment Act 2018, as latest as 18. The Negotiable Instruments Amendments Act 2018 received the assent of the President and was notified in the Official Gazette on 2nd August 2018 and came into effect from September 1, 2018. All right, so wherever you see the red lines already, those are topics that have been covered in part 1. So I'm going a little quick on those. But still, if you have any questions on any of these, you can ask me and I will be happy to answer. Okay? Then, like you can see, my handwriting is already there. Meaning of negotiable instruments. Negotiable instrument is an instrument which is freely transferable by customs of trade from one person to another by mere delivery or endorsement and delivery. The property in such instrument passes to bona fide. Bona fide means authentic or original, transferee for value. Okay, so now the negotiable instruments can be transferred from one person to another, or delivery or endorsement and delivery. For example, if A gives a check to B, it is delivery. If A gives a check to B for rupees 500 and B further endorses it and forwards it to C, then the bill of exchange is transferred, passes from A to C by endorsement and delivery by B, because he can obviously endorse behind it and give the same check to C. Okay, so this is the basic nature of negotiable instruments, and the main negotiable instruments that we're going to talk in this chapter about are bills of exchange, promissory notes, and checks. I'm sure most of you have heard of checks, but maybe not about promissory notes and bills of exchange. But we will also quickly go through what bills of exchange, promissory notes, and checks are. So the types of negotiable instruments are, like I told you, they are promissory notes, bill of exchange, and checks. Okay. Now, essential characteristics of negotiable instruments. Now, if you see my handwriting already there, so this slide has also been taken in part 1, but I will quickly recap it before we do today's session. Firstly, the negotiable instrument should be necessarily in writing. It cannot be oral, and written has to be mandatory. It should be signed. It should be signed by the issuer of the negotiable instrument. It is freely transferable from one person to another by delivery or by endorsement and delivery. Holder's title is free from defects. That means the person who issues the negotiable instrument should have a clear and good title on that negotiable instrument. He should have a bona fide title. It can be transferred any number of times till satisfaction. So a bill of exchange or a negotiable instrument can be transferred any number of times till its eventual encashment or satisfaction. Every negotiable instrument must contain either a promise or order to pay money. Also, the promise or order must be unconditional. Okay, so now either it can be like, I pay the money, please pay the money to him immediately, or it can be, please pay the money to him on a certain date. So if it's on a certain date, it is a promise. If it is immediately, it is a payment. Okay, and the promise or order must be unconditional. It cannot be a conditional order. The promise or order to pay must consist of money only. Nothing should be payable, whether in addition or in substitution to money. Also, the sum payable must be certain. So that means you cannot say, please pay him 100, please give him 100 mangoes in return of the service he provided. So it has to be money. So if you put anything else in a negotiable instrument other than money, it becomes invalid. All right. So yeah. So then we proceed with that. Then Presumptions as to negotiable instruments. I'm a little quick because see, as you can see, there are already marks on this and we have done this in part 1, but I'm recapping it for the people who have not attended part 1. Presumptions as to negotiable instruments. Presumption made in relation to consideration. So the presumption means assumptions or certain things that are taken for granted. Of consideration, every negotiable instrument was made or drawn for consideration, which means there is a underlying presumption or taken for granted that if a negotiable instrument is issued, it is issued as consideration for something. As to date, every negotiable instrument bearing a date was made or drawn on such date. So there's an assumption that if there is a date mentioned on the bill of exchange or a negotiable instrument, it is made or drawn on such date. As to time of acceptance, every accepted bill of exchange was accepted within a reasonable period after its date and before its maturity. Just one sec. Okay, and then as to time of transfer, every transfer of a negotiable instrument was made before its maturity. As to the order of endorsements, endorsements appearing upon a negotiable instrument were made in the order in which they appear. So when a person passes on a negotiable instrument to another person, in whatever order he has mentioned it, that order is the order in which the endorsement is made. As to stamps, lost promissory notes, bill of exchange or cheque was duly stamped. As to holder, the holder of a negotiable instrument is a holder in due course. So these are the above presumptions that are applicable to a negotiable instrument. Okay, now the above presumptions are rebuttable by any evidence to the contrary. So in case any of these assumptions do not apply, there should be evidence contrary to the same. Only then it will not apply. Okay, then now let's look at the first negotiable instrument. The first negotiable instrument is a promissory note. So let's quickly discuss about the promissory note. Okay, meaning according to section 4 of the Negotiable Instrument Act 1881, a promissory note is an instrument in writing, not being a bank note or a currency note, containing an unconditional undertaking signed by a maker to pay certain sum of money only to or to the order of a certain person or to the bearer of the instrument. The person who makes the promise is called as the maker. He is the debtor and must sign the instrument, and the person who makes the person who will get the money, the creditor, is known as payee. Okay, so the maker of a promissory note makes an undertaking, okay, to pay to a certain person any sum of money. Okay, so the person who makes the promissory note is known as the maker, and the person to whom the money is to be paid is known as a payee. All right. Yeah, so now down in the writing you see maker of a promissory note gives an undertaking in a promissory note to pay the payee a certain sum of money. So this is quickly about what is a promissory note. This has been discussed in part 1, so I'm just going a little quickly to recap it. Then essential characteristics of a promissory note in writing. So like every negotiable instrument, the promissory note has to be in writing. An oral promise to pay is not sufficient. There must be an express promise to pay. Mere acknowledgement of debt is not sufficient. So for a promissory note to be valid, it should have an express promise to repay or pay some money. Just acknowledging that, okay, I owe so much money to B, that is not a valid promissory note. Example, I acknowledge myself to be indebted to B in rupees 1,000 to be paid on demand for value received. Valid promissory note as the promise to pay is definite. Then example 2, Mr. B, I owe you rupees 1,000. Invalid promissory note as there is no promise to pay. It's just an acknowledgement of debt. So if you see here, there has to be a promise to pay a certain sum of money to the other person. A mere acknowledgement of debt is not sufficient. The promise to pay should be definite and unconditional. Therefore, instruments payable on performance or non-performance of a particular act or the happening or non-happening of an event are not promissory note. However, the promise to pay may be subject to a condition, which according to the ordinary experience of mankind is bound to happen. So, if the promissory note contains any condition about the happening or non-happening of an event which may or may not happen, then that is not a valid promissory note. A promissory note should be definite and sure, okay, and unconditional. Example, I promise to pay B rupees 500 7 days after my marriage with C. Now, no one is sure whether that person will marry C or not. So this is an invalid promissory note. Next example, I promise to pay B rupees 500 on D's death. The death of D is certain and the promise is unconditional. So the promissory note is valid because death will happen to everyone someday or the other. The next example, then a promissory note must be signed by the maker, otherwise it is incomplete. Like we saw, a negotiable instrument should always be signed by the maker of it. It should be a promise to pay money and nothing other than money. Okay, so only money is recognized and the promissory note should contain a promise to pay the money. I promise to pay rupees 500 and to deliver to him my black horse. On 1st Jan next, it is not a valid promissory note as the promisor needs to deliver it back black horse, which is not in money. So the negotiable instrument has to be in terms of money. All right, I have explained this, discussed each concept in part 1. I am just doing it for your benefit. Recapping. Promise to pay a certain sum. A promissory note should be a promise to pay a certain sum. The sum should be definite. It should not be that I promise to pay you some amount. No. What is the amount should be clearly mentioned. The maker and payee must be certain, definite and different persons. A promissory note cannot be payable to the bearer. Only Reserve Bank or central government can make or issue a promissory note payable to bearer. So the maker and the payee should be definite and different persons. Stamping a promissory note must be properly stamped in accordance with the provisions of the Indian Stamp Act, and such stamp must duly cancelled by maker's signature. So a promissory note contains it has to be stamped under the provisions of the Indian Stamp Act and the stamp should be cancelled by the maker's signature. Okay? Any questions in the meantime, please ask me. Then we go to the bill of exchange, the second negotiable instrument, bill of exchange. This again was discussed in part 1. So I will quickly recap what do you mean by a bill of exchange or what we missed in the part 1. A bill of exchange is an instrument in writing containing an unconditional order signed by the maker, directing a certain person to pay a certain sum of money to or to the order of certain person or to the bearer of the instrument. So here there are 3 parties. One is a drawer, then there is a drawee, and then there is a payee. Okay, so parties to the bill of exchange. First one is the drawer. A drawer is the maker of the bill of exchange, who makes the bill of exchange. A drawee is the person directed by the drawer to pay the money, is called the drawee. He is the person on whom the bill is drawn. On acceptance of the bill, he is called an acceptor and is liable for the payment of the bill. His liability is primary and unconditional. Payee, the person named in the instrument to whom or whose order the money is by the instrument directed to be paid is known as the payee, or to whom the money is to be paid. Okay? Essential characteristics of a bill of exchange. Like we saw the essential characteristics of a promissory note. Let's quickly go through the essential characteristics of a bill of exchange. It should be in writing, like every negotiable instrument. Must contain an express order to pay. There should be an express, not an implied order to pay. Mere acknowledgement of debt is not valid. Bill of exchange. The order to pay must be definite and unconditional. The drawer must sign the instrument. The drawer, drawee and payee must be certain. All these 3 parties may not necessarily be 3 different persons. One can play the role of 2, but there must be 2 different distinct people in any case. As per the section as per section 31 of the RBI Act, a bill of exchange cannot be made payable to the bearer. The sum must be certain. Okay, so you cannot say some money. You have to be certain about what sum it is. The order must be to pay money only. So other than money, there can be nothing else that you can include in a bill of exchange. And it should be stamped. Just like a promissory note, this should also be stamped. Now, we quickly go through the differences between a promissory note and a bill of exchange. Okay. Now, the first column gives you the serial number. The second is the basis. The third is the promissory note. And fourth is the bill of exchange. So, let's discuss this. Definition. A promissory note is an instrument in writing, not being a banknote or a currency note, containing an unconditional undertaking signed by the maker to pay a certain sum of money. A bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. The nature of instrument. In a promissory note, there is a promise to pay money. In a bill of exchange, there is an order to make payment. Parties. In a promissory note, there are two parties, that is the maker and the payee. In a bill of exchange, there are three parties, that is the drawer, drawee, and the payee. Acceptance. The promissory note does not require any acceptance as it is signed by the person who is liable to pay. A bill of exchange needs acceptance from the drawee. Quickly, we have gone through the differences. Again, it's been discussed in detail in part 1. Please go through this in part 1. I'm trying to recap. Now, we look at a check. I'm sure all of us listening to this session today have heard of the term check and what it means. So let's quickly discuss what a check is. A check is a bill of exchange. So it is another form of bill of exchange drawn on a specified banker and not expressed to be payable otherwise than on demand. So the person to whom you give a check, he has to present the check and demand money. Only then it will be payable to him. Just by issuing the check, he will not get the money. And it includes electronic image of a truncated check and a check in electronic form. So a check is a bill of exchange drawn on a specified banker, payable on demand. So these are the essential characteristics of a check, okay, or the definition of a check. Then payable on demand means it should be payable whenever the holder chooses to present it to the bank. Okay, so whoever gets a check, just by keeping it in his wallet or in his house, he will not get the payment. So whenever he wants the money, he should present it to the bank and demand for a payment. The expression banker includes any person acting as a banker and any post office savings bank. Let's look at some explanations. Check in electronic form means a check drawn in electronic form by using any computer resource and signed in a secure system with digital signature, with or without biometric signature, and a asymmetric crypto system electronic signature. For the purpose of this section, the expressions asymmetric crypto system. So simply, check in truncated electronic form means anything that is scanned, and it could be signed by a digital signature or it could not be signed by a digital signature. A truncated check means a check which is truncated during the course of a clearing cycle, either by the clearinghouse or by the bank, whether paying or receiving the payment immediately on generation of an electronic image for transmission, substituted further for physical movement of the check. Okay, so truncated and electronic form means it is first converted to electronic form and then it is sent to the receiving or paying bank where it is approved, and then the further transfer of money takes place. Okay, explanation 2, it's pretty much the same. Now, parties to a check. Now, like we saw, the parties to a promissory note are the maker and the payee, whereas parties to a bill of exchange is the drawer, drawee, and the payee. So similarly, in the parties to a check are a drawer, bank will be the drawee here, and the payee. Okay, so drawer, the person who draws the check or makes the check is known as debtor, and his liability is primary and conditional, that is a drawer. Drawee, the specific bank on whom the check is drawn is known as the drawee. In this case, it is a bank. He makes the payment of the check. In case of check, drawee is always the banker. Pay, the person named in the instrument, that is to whom you issued the check, to whose name you mentioned the check. He is the payee. That means you are paying money to him. So the person named in the instrument to whom or to whose order the money is by the instrument directed to be paid is called the payee. The payee must be the drawer himself or a third party. Okay, so these are the characteristic parties to a check. Now we look at the essential characteristics of a check. According to the definition of check under section 6, a check is a species of a bill of exchange. So it is another form of a bill of exchange. Thus, it should fulfill all the essential characteristics of a bill of exchange. So whatever essential characteristics we discussed for a bill of exchange are applicable to a check as well. In addition to this, it must always be drawn on a specified banker. It must be payable on demand. That means the person who's got the check should present it, and only then he gets the payment. Acceptance. The acceptance of a bill is the indication by the drawee of his assent to the order of the drawer. Section 7 says that the acceptance is the signature of the drawee of the bill who has signed his assent upon the bill and delivered it. Okay. Now, this one, please go through this in part 1 to know more about this. We have spent a lot of time on explaining this, so I do not want to take that kind of time in part 2 again. So please go through this when you find the time. In your part 1, we have discussed and spent a lot of time on this. Then we look at the essential. Okay, this also we have discussed in part 1. Please go through this carefully. Okay. Okay, now let's start off with today's session. Just one second. Okay, so here we start off with today's session. Okay, so now I will give you enough time to read, I will give you enough time to understand things, and we've done with the recap on the part 1. So let's talk about holder and holder in due course. Holder, as per section 8, the holder of a promissory note, bill of exchange or cheque means any person entitled in his own name to the possession thereof, and to receive or recover the amount due thereon from the parties. So let's read it again. A holder of a promissory note, bill of exchange or cheque means any person entitled in his own name to the possession thereof, and to receive or recover the amount due thereon from the parties. So that means if you issued a bill of exchange or promissory note or a cheque to someone, let's say A issues it to B. So B will be the holder, because B is authorized to have the promissory note or bill of exchange or cheque in his own hands, and he's also authorized or entitled to recover that amount from the person who issued that promissory note, a bill of exchange or cheque. So that person is known as a holder of a bill of exchange. Okay, let's take an example. Example, a person who finds or steals a bearer instrument or takes an instrument under forged endorsement is not a holder. The reason is that the holder of a negotiable instrument must have a right to receive or recover the money thereon from the parties thereto. That means, let's say it is a bearer instrument, that whoever has that negotiable instrument is authorized to collect money on that. Okay, and it is found on the road by someone. So that person is not really the holder of the instrument, because he is not entitled to receive that money which is mentioned in the bill of exchange. So even if he goes tomorrow and encashes the cheque, it is wrong, and he can be taken legal action against, because he was not the person authorized or entitled to receive the money under such a bill of exchange or instrument. Okay, example again, an agent holding an instrument for his principal is not a holder. The reason being that although agent can receive the payment of the instrument, he has no right to sue on the instrument in his own name. Like I gave you in the previous example also, even an agent can hold an instrument on behalf of the principal. He may even go and encash it. But at the end of the day, was he entitled to receive that money on that instrument? No. So in that case, he is not considered as a holder. Please take a minute, go through this, and then we proceed. This is where we're starting today's session. Okay, now we go to holder, and now we talk about another topic called holder in due course. A holder in due course means any person who for consideration became the possessor of a promissory note, bill of exchange or cheque if payable to bearer, or the payee or endorsee thereof, before the amount mentioned in it became payable, and without having sufficient cause to believe that any defect existed in the title of the person from whom it is derived. Okay, so that means a person in due course means before the date on which the amount is payable by that bill of exchange. If someone else comes into the possession of that bill of exchange, okay, and without having sufficient cause to believe that any defect existed in the title of the person from whom he derived this title, then he will be known as a holder in due course. Let's try to understand this. With an example. A draws a cheque for rupees 5,000 and hands it over to B by way of gift. B is the holder but not a holder in due course, as he does not get the cheque for value and consideration. His title is good and bona fide. As a holder, he is entitled to receive rupees 5,000 from the bank on whom the cheque is drawn. Okay, so here A issues a cheque for rupees 5,000 to B and gifts it to him. So if you read on top, one of the important essentials for a holder in due course means they should be for consideration. So because A has given B a gift of rupees 5,000, obviously it means without consideration. So if the check has been given from A to B without consideration, okay, then B cannot be said to be a holder in due course, but he has to be just a holder. So he's entitled to receive the 5,000 from the bank on whom a check is drawn. That's example number 1. Let's look at example number 2. On a bill of exchange of rupees 1 lakh, X's acceptance to the bill is forged. A takes the bill from his customer for value and in good faith before the bill becomes payable. State the reasons whether A can be considered as a holder in due course and whether he can receive the amount of the bill from X. Now, on the bill of exchange for rupees 1 lakh, X's acceptance to the bill is forged. So that means X has really not accepted the bill, but his acceptance on the bill of exchange is forged. A takes the bill from his customer of a value and in good faith. So A does not know that X's acceptance is forged. He takes the bill in good faith from his customer before the bill becomes payable. Now we need to discuss whether whether A can be considered as holder in due course and whether he can receive the amount of the bill from X. Please take a minute, go through this, and then we proceed. Okay, now let's look at the answer. According to Section 9 of the Negotiable Instruments Act 1881, a holder in due course means any person who for consideration becomes the possessor of a promissory note, bill of exchange or check if payable to the bearer or payee or endorsee, if payable to the order before the amount becomes payable, and without having sufficient cause to believe that there is any defect existed in the title of the person from whom he derived his title. As A in this case prima facie became a possessor of the bill of exchange for value and in good faith before the bill became payable, he can be considered as a holder in due course. Okay, now what do you mean by holder in due course? Now there was A, okay, he issued a promissory note to B and told him that I'll pay a certain sum of money on 30th September. Okay, now before the money became due, B purchased certain goods from C and further endorsed the bill of exchange to C before the due date of September 30th. So C becomes the holder in due course because he has received the bill of exchange as consideration for a commercial transaction from B. And in case C is not aware whether B has obtained it by forgery or fraud, and he accepts the bill of exchange in good faith, then C will be the holder in due course. Please take a minute, go through this, and then we proceed. Okay, any questions? Please ask me. Okay, now let's look at the essentials to become a holder in due course. Okay, now what are the essential elements for a person to become a holder in due course? Firstly, the holder must have paid valuable consideration. Okay, so first, what we read in the earlier slides also, there has to be some consideration. So the holder in due course should have paid valuable consideration to become a holder in due course. A person must obtain a negotiable instrument by paying valuable and lawful consideration. All right. So if it's not valuable and lawful consideration, after which a person comes in possession of a negotiable instrument, then it is not said to be a holder in due course. When given as a gift or has been inherited, the transferee cannot be a holder in due course. We already saw that because for a simple reason, there is no consideration. So if there is no consideration, you cannot be a holder in due course. So for a holder, for you to be a holder of negotiable instrument in due course, there has to be a consideration. If any negotiable instrument is given to you free or gift or by inheritance, then the transferee to whom the negotiable instrument has been given cannot be a holder in due course. Okay, a holder must acquire the instrument before its maturity in order to attain the status of due course. So if the maturity date of the negotiable instrument is September 30th, the holder of in due course should receive that statement before September 30th and not after September 30th. Okay, the holder must have obtained it in good faith. Whoever is getting the bill of exchange or a negotiable instrument should not have any reasons to believe that the person who's giving the negotiable instrument or the check to him has obtained it by stealing, by fraud, or by forgery. So in case he has no reason to believe so, he can be a holder in due course. All right. Then the instrument must be complete and regular on the face of it. The negotiable instrument should not be incomplete, and there should be nothing unusual about it or irregular about it. And then he must have received the instrument as a holder. The holder in due course may be either a payee or the possessor if the instrument is payable to the bearer, or the endorsee if the instrument is payable to the order. All right. So these are a few essentials essential elements or ingredients to become a holder in due course. I request you to take 2 minutes, go through this, and then we proceed. Please take about a couple of minutes, go through this, and then we proceed. Okay, now what are the privileges of being a holder in due course? Now, in the previous slides, we read the essential elements and what constituted a holder in due course. So obviously, if we discuss all that, there has to be a reason why a person would want to be a holder in due course. So now let's read know the privileges of being a holder in due course. In case of an incoherent instrument, a person signing and delivering to another a stamped but otherwise incoherent instrument, when you executed an unfilled up but duly signed negotiable instrument such as a check or promissory note, it is an incoherent. That means it's signed but it's incomplete. Either the date is not there, the amount is not there, or the party is not there. So whenever a negotiable instrument is signed but it is incomplete, it is known as an incoherent instrument. So any person giving and signing and delivering to another person a stamped but otherwise incoherent means incomplete negotiable instrument is debarred from asserting as against the holder in due course that the instrument has not been filled in accordance with the authority given by him, the stamp being sufficient to cover the amount. So in case a person issues an incoherent instrument to someone else, later on he cannot say that no, this is an incomplete instrument as per the Negotiable Instruments Act, and he can take protection below that provision. No, a holder in due course will be validly holding that instrument. Let's take an example. A signs his name on a blank but stamped instrument which he gives to B with an authority to fill up as a note for sum of rupees 3,000 only. But B fills it for rupees 5,000. But B fills it for rupees 5,000. B then transfers it to C for a consideration of rupees 5,000, who takes it in good faith. Here in this case, C is entitled to recover the full amount of the instrument because he's a holder in due course, whereas B, being the holder, cannot recover the amount because he filled in the amount in excess of his authority. So in this case, if you see, the holder in due course gets a good title over the negotiable instrument. So in this case, what happened? A issued a blank check to B and told him to put 3,000 rupees on it. But B, instead of 3,000, by his ill means or ill intentions, put 5,000 on it and further endorsed it to C. So C did not know that B has done that B was supposed to put 3,000 but he put 5,000. So C becomes a holder in due course in good faith. Okay, so because he becomes a holder in good faith, here C is entitled to recover the entire 5,000 from B, but B can recover only 3,000 from A because he's done it by forgery or by fraud. Okay, so B is not the holder in due course. B is not even considered a holder. So C is a holder in due course who gets a good title to the negotiable instrument. Please take a minute, go through this, and then we proceed. I'm fine, Mrs. Shushla Gupta. How are you doing? I'm from Bangalore. What about you, madam? Where are you from? And thank you for attending my session. Welcome to my session. Okay, take about a couple of minutes, go through this. Okay, now we look at the second privileges of being a holder in due course. In case of a fictitious bill, in case a bill of exchange is drawn payable to the drawer's order in a fictitious name and is endorsed by the same hand as the drawer's signature, it is not permissible for the acceptor to allege as against the holder in due course that such name is fictitious. So let's say A issues a check to some fictitious name, okay, and that name does not even exist, and further on someone else endorses that, okay, and then in a fictitious name, and it is endorsed, and the same person who's drawn it, so let's say a person signs a check in favor of let some person, okay, some imaginary person who does not exist. So, and he also endorses it in his own name. The person who draws the check also endorses it in his own name. Then if he gives it to someone else, then he cannot take the protection that no, this bill of exchange was given to an imaginary person. No, because the person drawing it himself has endorsed it. So the holder in due course will get a good title to that check. Okay. Now, in case of a conditional instrument or escrow, in case of a bill or note is negotiated to a holder in due course, the other parties to the bill or note cannot avoid liability on the ground that delivery of the instrument was conditional or for special purpose only. Okay. In case of instrument obtained by unlawful means or for unlawful consideration, a person liable in a negotiable instrument cannot set up against the holder in due course the defenses that the instrument has been lost or obtained from the former by means of an offense of fraud or unlawful consideration. Thus, the holder in due course acquires a free title from all defects. So, if a holder in due course receives any negotiable instrument without having to believe that the person who's giving him the negotiable instrument does not hold title of that, then he will acquire a good title, free from all defects from the person giving him the negotiable instrument. Okay. In case of original validity of the instrument is denied, no maker of a promissory note and no drawer of a bill or check and no acceptor of a bill for the honor of the drawee shall in a suit thereon by a holder in due course be permitted to deny the validity of the instrument as originally made or drawn. In short, the holder in due course gets a good title to the bill. So let's say the bill or check is issued for date of September 30th. Later on, the issuer of the check or the drawer of the bill of exchange or the promissory note cannot plead that the validity of the check is invalid, and that's why the holder in due course does not get a good title. No, the holder in due course will get a good title irrespective. Please take 2 minutes, go through this, and ask me any questions you may have. Please take a couple of minutes, go through this. Any questions, please ask me. Take a minute more. Okay. Then, in case of pay's capacity to endorse is denied, no maker of a promissory note or no acceptor of a bill of exchange to order in a suit thereon by a holder in due course be permitted to deny the pay's capacity at the date of the bill or note or to endorse the same. In short, the holder in due course gets a good title. So, in case the drawer of a bill of exchange or a check or someone has a case going on, and later on he says, no, no, sir, the person who the check or the bill of exchange was issued to itself was not in the capacity to accept it. So obviously he cannot endorse it further. So the person in holder in due course also becomes void. In that case, he cannot use that argument because a holder in due course gets a good title to the bill. Okay, if he takes it in good faith. Payment in due course. Payment in due course means payment in accordance with the apparent tenor of the instrument in good faith and without negligence to any person in possession thereof, under circumstances which do not afford a reasonable ground for believing that he is not entitled to receive the payment. So, if a holder in due course has any instrument and he's obtained it in good faith and he has no reasons to believe that he is not entitled to it, or the person who gave him that is not entitled to give him, he can go ahead on the due date and encash the check or the bill of instrument, and that is known as a payment in due course. Okay, please take a minute, go through this, and then we proceed. Please take about a minute or two, go through this, and then we proceed. Okay, now we look at the classification of negotiable instruments. This is a very important topic. Now we've gone through hearing throughout the session about bearer instrument, order instrument. What are those? So let's quickly run through what is a bearer instrument and what is an order instrument. Okay, a bearer instrument. A bearer instrument, it is an instrument where the name of the payee is blank or where the name of the payee is specified by the words or bearer, or where the last endorsement is blank. Such instrument can be negotiated by mere delivery. So it means where the negotiable instrument does not have the name of the person to whom the negotiable instrument is issued to, then that is known as a bearer instrument. That means whoever has the instrument in his hand, he can put in his name and go and encash the instrument. All right, so that is a bearer. Bearer means whoever holds the instrument. Similarly, what is an order instrument? It is an order it's an instrument which is payable to a person or payable to a person or his order or payable to the order of a person, or where the last endorsement is filled. Such instrument can be negotiated by endorsement and delivery. So basically it means where the person's name is mentioned to whom the negotiable instrument is issued to, and it can be paid to a certain person or to the order of that certain person or as per the directions provided by that person or by the endorsements done by the person. So that is an order instrument. That is not a bearer instrument. A bearer instrument is whoever holds the instrument. If he puts in his name or he mentions or bearer, he can go and encash the instrument. But an order instrument is against a specific person, and that instrument is payable only to that person or to his order or to his endorsement. Okay, please take a minute, go through this, and then we proceed. Take about a minute. Okay. Then we look at another type of classification of instruments, that is inland instrument and a foreign instrument. Okay. Now first we saw order instrument and bearer instrument. Now let's look at inland instrument and foreign instrument. A promissory note, bill of exchange or check drawn or made in India and made payable in or drawn upon any person resident in India shall be deemed to be an inland instrument. So an inland instrument is pretty simple. A in Bangalore issues a check to B in Mumbai, payable in Mumbai or payable in India. That is an inland instrument. Okay, so because the drawer and the pay both are in India and the instrument is also payable in India. Example, a promissory note made in Kolkata and payable in Mumbai. A bill drawn in Varanasi on one person resident in Jodhpur, although it is stated to be payable in Singapore. Okay, so let's read it again. A bill drawn in Varanasi on one person resident in Jodhpur, although it is stated to be payable in Singapore. So here we see the drawer and the payee both are in India. Although the bill of exchange is stated to be payable in Singapore, it will still be an inland instrument. Okay, then we come to a foreign instrument. Any such instrument not so drawn, made or payable shall deem to be a foreign instrument. In other words, a bill drawn outside India and made payable in or drawn upon any person resident in any country outside India. So if the bill is drawn outside India and it is payable to any person outside India. First case, then the bills drawn outside India and made payable in India or drawn upon any person resident in India. So the bill is drawn outside India and it is made payable to any person in India, resident in India. Or a bills drawn in India and made payable outside India or drawn upon any resident outside India but not made payable in India. So here are the three cases where we see about a foreign instrument. A foreign instrument, any instrument will become a foreign instrument in the following cases: when a bill of exchange is drawn outside India or a party outside India, okay, or drawn upon any person resident in any country other than India. When the bill of exchange is drawn outside India on any person resident in the India, okay, that's the second case. Then a bill of exchange drawn in India but payable outside India or drawn upon any resident outside India. In these three cases, it will be known as a foreign instrument. Okay, please take about a minute, go through this, and then we proceed. Please take a minute. Take a minute and go through this, the difference between an inland instrument and a foreign instrument. Okay, now negotiation and transfer of negotiable instruments. Now let's talk about how are negotiable instruments transfer. Okay, one of the essential characteristics of a negotiable instrument is that it is freely transferable from one person to another. The rights in a negotiable instrument can be transferred from one person to another by, okay, so one of the main features or advantages of a negotiable instrument is it can be freely transferable or transferred from one person to another. The rights in a negotiable instrument can be transferred from one person to another by, okay, negotiation under the Negotiable Instruments Act, assignment under the Transfer of Property Act. Okay, so now the negotiable instrument is freely transferable from one person to another, but the rights in the negotiable instrument can be transferred from one person to another by two methods. First is negotiation under the Negotiable Instruments Act, and second is assignment under the Transfer of Property Act. Now we will read each of these in detail now. According to Section 14 of the Negotiable Instrument Act, when a negotiable instrument is transferred to any person with a view to constitute the person holder thereof, the instrument is deemed to have been negotiated. Okay, thus there is a transfer of ownership of the instrument. Negotiable instruments may be negotiated either by delivery or when these are payable to bearer, or by endorsement and delivery when they are payable to the order. Okay, so now when a negotiable instrument is transferred from one person to another, in order to make the other person to whom it has been transferred the owner, okay, then it is deemed to have been negotiated. Okay, the constitute the person holder thereof, then the instrument is said to be the negotiated. Thus, there is a transfer of ownership of the instrument. Negotiable instruments may be negotiated either by delivery when they're payable to the bearer, or by endorsement and delivery when they're payable to the order. Okay, so now when the whole objective of transferring the negotiable instruments from A to B is that to make the B the holder of that instrument or the owner of that instrument, then it is said to be negotiated, and then the ownership of that negotiable instrument transfers from A to B. Yeah. Now the negotiation of the negotiable instrument can be done either by delivery if the instrument is payable by order or payable to the bearer, or by endorsement and delivery where it is payable on the order. Okay, this is an important point here. Please take a couple of minutes, go through this. And negotiation, that is transfer of negotiable instruments, is done this way. It's important to know. Take a couple of minutes, go through this. Take a minute more, go through this. Okay, now we look at the modes of negotiation of an instrument. A promissory note, bill of exchange, or a cheque payable to bearer is negotiable by delivery thereof. A promissory note, bill of exchange, or a cheque payable to order is negotiable by order, by endorsement and delivery. Now let's take the two situations. See, like we discussed earlier, a negotiable instrument can either be a bearer instrument or an order instrument. Okay, now if it's a promissory note, bill of exchange, or cheque payable to the bearer, that means you're issuing it to someone and he's supposed to be the sole beneficiary of the instrument. Then negotiation is completed when it is delivered from A to B and it is an instrument that is payable to the bearer, that is B. Okay, now a promissory note, bill of exchange is cheque payable to order is negotiable by the holder by endorsement and delivery. So A issues a cheque to B by endorsement and then it delivers it to B. In that case, a holder in due course will get the negotiation. Okay, so the negotiation of an instrument of payable on order can be done by mere delivery, but negotiation of an instrument or negotiable instrument, a negotiation of a negotiable instrument payable on the order can be done by endorsement and delivery, whereas negotiation of a negotiable instrument payable to the bearer is done by delivery. Okay, now what is negotiation by delivery? Let's have a look. Subject to provisions of section 58, a promissory note, bill of exchange, or a cheque payable to bearer is negotiated by delivery thereof. Exception: a promissory note, bill of exchange, or cheque delivered on condition that it is not to take effect except in a certain event is not negotiable, except in the hands of the holder for value without notice of the condition, unless such event happens. Okay, so a promissory note, bill of exchange, or cheque delivered on the condition that it is not to take effect except in a certain event is not negotiable. Okay, except in the hands of the holder for value without notice of the condition unless such event happens. So let's take, for example, if there is any instrument that is payable to the bearer, the negotiation is done by delivery thereof. But let's say a delivery is done on the condition that a certain event should occur, then that is not considered as negotiation. But in case the negotiable instrument goes on further to a holder in due course and who obtains that negotiable instrument in good faith, in that case it will not be an exception and it will be a good title. Okay, Please take about 2 minutes, go through this, and then we proceed. Hi Tarun, how are you? I'm good. How are you doing? Thanks for joining in. Okay, please take a couple of minutes and then we proceed. Take a couple of minutes, go through this, and then we proceed. Okay. Now let's take an example. A is the holder of a negotiable instrument payable to the bearer, delivers it to B's agent to keep it for B. The instrument has been negotiated. So we saw that any negotiable instrument which is payable to the bearer, the negotiation is complete when it is delivered to the bearer of the instrument. So in this case, we have delivered it to the B's agent to keep it for B. So the instrument has been negotiated or the instrument has been transferred. Okay, let's take the second example. A holder of a negotiable instrument, A, the holder of a negotiable instrument payable to bearer, which is in the hands of A's banker, who is at the time the banker of B, directs the banker to transfer the instrument to B's credit in the banker's account with B. The banker does so and accordingly now possesses the instrument as B's agent. The instrument has been negotiated and B has become the holder of it. So now negotiation, like I told you again, is transfer. So A is the holder of a negotiable instrument which is payable to the bearer, B. Okay, now he gives it to A, gives it to his banker, who also is the banker for B. So A tells him that I need to transfer this money to B, so please hold the thing on behalf of B. So when A, the banker of A, takes the cap or takes the role of the banker of B, then he acts as B's agent, and then the negotiation of the bearer instrument is said to have been transferred from A to B. Okay. Then the second thing we look at is negotiation by endorsement. Subject to provisions of section 58, a promissory note, bill of exchange or cheque drawn, a bill of exchange or cheque payable to order is negotiable by the holder by endorsement and delivery thereof. Okay, so now a promissory note, bill of exchange or cheque payable to order is negotiable by the holder by endorsement and delivery therefore. That means the transfer of a negotiable instrument payable to order is done by endorsement and delivery thereof. Okay, so importance of delivery in negotiation. Delivery of an instrument is essential whether the instrument is payable to bearer or the order for effecting the negotiation. So for any negotiation or transfer to happen, the delivery of the instrument has to happen. It does not matter whether the instrument is payable to bearer or payable to the order, but the delivery of the instrument needs to happen for transfer of the instrument from the drawer to the drawee. The delivery must be voluntary and the object of delivery must be to pass the property in the instrument to the person to whom it is delivered. So like we read, the delivery of the instrument is very essential because the whole intention of transfer of ownership of that negotiable instrument can happen from person A to B only when the delivery is given. By keeping a check in the pocket and keep saying, no, the check is given to you, delivered to you, negotiation has happened, that's not possible. The check needs to be delivered to the person whom you intend to be the owner of the negotiable instrument. The delivery can be actual or constructive. Actual delivery takes place when the instrument changes hands physically. Constructive delivery takes place when the instrument is delivered to the agent, clerk or servant or of the endorsee on his behalf, or when the endorser after endorsement holds the instrument as the agent of the thing. So please remember, for any negotiation of a bill of exchange, whether it is a bill of exchange payable on order or payable to the bearer, the delivery of the negotiable instrument is very important for it to transfer from A to B. because the ownership will not transfer from A to B unless the delivery of that negotiable instrument has happened. Now, the delivery can be an actual delivery where you actually go remove the check and give it to the other person, or it can be a constructive or it can be a constructive delivery where you say that, okay, I have endorsed the check to you. Now I am your agent and I'm holding it on behalf of you. Or you go and hand over the check to the agent of the person to whom you intend to deliver the check. In that case, it is a constructive delivery. Okay, please take about 2 minutes, go through this, and then we proceed. Take about 2 minutes, go through this, and then we proceed. Take a minute more. Please go through this and then we proceed. Hi Pratham, how are you? Thanks for joining in. Any questions, please ask me. Okay, now delivery when effective between the parties. So now when is a situation in which the delivery is said to be effective between the parties? The negotiation of instruments between the parties. As between the parties standing in immediate relation, as between such parties and any other holder of the instrument other than a holder in due course. How delivery is to be made? Delivery to be effected must be made by the party making, accepting or endorsing the instrument, or by the person authorized by him. So who can deliver the negotiable instruments from one person to another? So like I told you, the whole objective of delivering negotiable instruments from A to B is also to transfer the ownership of that negotiable instrument from A to B. So now who can deliver the negotiable instrument? The negotiable instrument can be delivered by the party who's made the bill of the negotiable instrument, who's drawn it, or who's accepted it. Okay, so it could be a person payable to the order of someone accepting it, or the person who's endorsing it. So the person who makes it, accepts it, or endorses the negotiable instrument, or any person authorized on their behalf can further deliver the negotiable instrument. Okay, and no one else. Okay, so that's the first part. It may be shown that the instrument was delivered conditionally or for a special purpose only, and not for the purpose of transferring absolutely the property therein. Okay, now in certain cases, it may be shown that the instrument was delivered conditionally or for a special purpose only, and not for the purpose of transferring absolutely the property therein. In that case, there will be no delivery that is said to have been made. Okay. I am fine, Pratham. How are you doing? How's preparations going on? I hope you're finding the session useful. Okay, please. Thank you, Pratham. I'm glad you like it. Thank you so much. Okay, now endorsement of an instrument. Now we've seen about delivery, negotiation, and everything. Now let's look at what do you mean by endorsement of an instrument. Okay, so we are talking about endorsement of an instrument. Now, when a maker or holder of a negotiable instrument signs the same, otherwise than as such maker, for the purpose of negotiation, on the back or face thereof, or a slip of paper annexed thereto as an allowance, a French word meaning a slip of paper attached to the end of a bill of exchange to give room for further endorsements. He is said to endorse the same and called as the endorser. The person to whom the instrument is endorsed is called the endorsee. The endorsement therefore means signatures of a person which are generally made at the back of the instrument for the purpose of negotiation, that is transfer of rights to another person. The signature may also be made on the face of the instrument. No particular form of words is necessary for an endorsement. Alright, so this is a very interesting concept. Now let's try to understand what you mean by an endorsement. Okay, now please listen carefully. When the maker, okay, let's say A issues a check. Okay, where is the point here? Okay, A issues a check to B. Okay, or hold when a holder or maker or holder of the negotiable instrument. Okay, now B is the holder. Okay, now current case B is the holder. Now where B signs his name behind the check. Okay, signs behind the check. Okay, or any slip of paper that may be there on the bill of exchange. Okay, and passes it on to C because B owed money to C. Okay, in this case, an endorsement is said to have been made by the holder of the check in favor of another person. So that means he's endorsed the check that A gave to him in favor of C by signing his name behind the check. Okay, now in this case he is the holder, but in case directly A wanted to give the check to C, then he could have also signed his name behind the check and given it to C. Then it would have been the maker of the check. Okay, now the B here becomes the endorser and C becomes the endorsee. The endorsement therefore means signatures of the person which are generally made at the back of the instrument for the purpose of negotiation. Negotiation means transfer of the instrument as along with rights to another person. So how did B transfer the rights and the instrument to C? By signing his name behind the check and then passing it on to C. So the negotiation was said to be made by B to C, where he delivered the instrument from B to C and also transferred the ownership from B to C. Okay, so no particular form of words is necessary for endorsement. So for endorsement, you don't need to write anything. You need to just sign at the back of it and give it to someone else. Okay, then endorsement, where the maker or holder of a negotiable instrument signs the same otherwise than as such maker for the purpose of negotiation on the back or face of the or on a slip of paper annexed thereto, or no signs for the same purpose, a stamped paper intended to be completed as a negotiable instrument, he, the maker or holder, is said to endorse the same and is known as an endorser. So in the second case, we're talking about the maker of the instrument. In the first case, we're talking about the holder of an instrument. Okay, so they just need to sign behind it and nothing else and give it to someone else. That's called an endorsement. Okay, so now please take about 2 minutes, go through this, and then we proceed. Hello, Mr. Swatantra, how are you? Thanks for joining in. Welcome to my session. I hope you're finding it useful. Any questions? Please ask me. Please take a couple of minutes, go through this, and then we proceed. Okay, now let's take an example. Example, X, who's the holder of a negotiable instrument, writes on the back thereof, pay to Y or order, and signs on the instrument. In such a case, X is deemed to have endorsed the instrument to Y. If X delivers the instrument to Y, X ceases to be the holder and Y becomes the holder in due course in case it is for a consideration. Alright, so X is the holder of a negotiable instrument. He would have got it from maybe A. Okay, so behind it he writes pay to Y or order and signs behind it and gives it to and gives the delivery to Y. In this case, X is deemed to have endorsed the instrument to Y. If X delivers the instrument to Y, X ceases to be the holder and Y becomes the holder. Okay. Endorsement in blank and endorsement in full. Let's talk about this. If the endorser signs his name only, the endorsement is said to be in blank. And if he adds a direction to pay an amount mentioned in the instrument to or to the order of a specified person, the endorsement is said to be in full. and the person so specified is known as the endorsee of the instrument. Okay, now let's take this example, the first one. In this example, here X has clearly mentioned pay to the order, pay Y or order. So, and he signs. So this is an endorsement in full. But in case he just put the signature on the instrument without writing this, then it would have been an endorsement in blank, because he's not mentioned. It's just as good as a blank check. So it's because he's not mentioned the name of the person to whom the check is issued. Okay, so it can be, that will be an endorsement in blank. Anyone can fill their names and take the money mentioned in the check. Okay, so in the first case it is an endorsement in full, and in the second case, in case he does not write pay to Y or order, it is an endorsement in blank. Okay, are you clear? The provisions of this act relating to a payee shall apply with necessary modifications to an endorsee. Okay, so now the person to whom a negotiable instrument is endorsed is known as an endorsee, and the person who endorses it is known as endorser. Let's take an example. Blank or general. So no endorsee is specified in an endorsement in blank. It contains only the bare signature of the endorser. The bill so endorsed becomes payable to the bearer. So anyone who is holding the instrument can put his name there and take over the money. Okay, so this is an endorsement in blank. Please take 2 minutes, go through this, and then we proceed. Take a minute. Okay, let's take an example 2, which is a endorsement in full. In such an endorsement, in addition to the signature of the endorser, the person to whom or whose order the instrument is payable is specified. Okay, so pay to B, Batliwala or order, and then sign off. So this is a endorsement in full. All right, now various kinds of endorsements. Let's look at this, an important concept. Endorsement in blank, only signature, we already saw this, where the endorser just puts his signature without specifying the endorsee to whom the negotiable instrument is endorsed to. The endorsement is said to be in blank. Section 16. The effect of such an endorsement is to render the instrument payable to the bearer, even though originally payable to the order. So check which is payable to C or to the order of C. If C just puts his signature at the back and gives it to someone else, then it becomes a bearer instrument, even though when he got it, he got an order instrument. Okay. Now, endorsement in full, where along with the endorser's signature, the name of the endorsee is mentioned. Then the endorsement is called endorsement in full, section 16. Thus, where the instrument states pay X or order and is signed by A, the payee, it constitutes the endorsement in full. We have already discussed these matters in the previous slides. Please take a couple of minutes, go through this, and then we proceed. Okay, please take a minute more, go through this, and then we proceed. Okay, now we also look at the third kind of endorsement, that is a partial endorsement. An endorsement which purports to transfer only a part of the amount of the instrument is called a partial endorsement. As per section 56, such an endorsement is invalid under law. So if the check given to you is for 6,000, you have to endorse the entire check for 6,000. You cannot endorse out of that 6,000, 3,000 to someone. Such an endorsement is invalid in law. Let's take an example. A is the holder of a bill for rupees 10,000. Bill means bill of exchange. A endorses it thus: pay B or order rupees 5,000. This is a partial endorsement and invalid for the purpose of negotiation. That means out of the bill of exchange for 10,000, A cannot just endorse it for 5,000. He has to endorse the entire 10,000 or not endorse at all. So it is an invalid purpose of negotiation. Okay. Exception. Second part of section 56 states that if a bill has been paid in part, the fact of the part payment may be endorsed on the instrument and it may be negotiated for the residue. Example, a bill may be endorsed, pay order rupees 5,000 being the unpaid residue of the bill. It is a valid endorsement. So let's say out of 10,000 of the original bill, only 5,000 has been received by the holder. Okay, so for the remaining 5,000 that is unpaid on that, he can mention that please pay to B the unpaid amount of the bill and endorse it. Alright, but this does not normally happen. Okay, but there is a provision for this. Okay, restrictive endorsement. Now, restrictive endorsement means an endorsement is restrictive when the endorser, while making the endorsement, restricts or excludes the right of the endorsee to further transfer the instrument or constitutes the endorsee as to endorse the instrument or to receive its content for the endorser or for some other specified person. An endorsement is restrictive when it prohibits or restricts the further negotiability of the instrument. It merely entitles the holder of the instrument to receive the amount on the instrument for a specific purpose. So, A issues a check to B. B puts his signature at the back and says pay to the order of C. Okay, but he also says that C is not allowed to further endorse it to D, E, F, G. In this case, it is a restrictive endorsement as he wants the endorsement to end with C and C can take the money himself, but he cannot further endorse it to anyone else. Okay, so that is what you mean by restrictive endorsement. So we've seen partial endorsement, we've seen restrictive endorsement. Please take about a minute, go through this and then we proceed. Okay, now let's take an example. D signs the following endorsement on different negotiable instruments payable to bearer. Pay the contents to G only. Pay G for my use. Pay G or order for the account of H. These endorsements exclude the right of further negotiation. In the first case, he says pay G to G the contents only. That means G cannot further endorse it. Second, he says pay G for my own use. That means G can only use it for to withdraw the money and give it to D and for nothing else. Pay G or order for the account of H. So further it says G can only further endorse it to H and no one else. So in all three, you see there are restrictions placed. Hence these are known as restrictive endorsements. Okay, these endorsements exclude the right of further negotiation by G. Negotiation by G means transfer of possession as well as transfer of ownership of the negotiable instrument. The fifth one is a conditional endorsement. Section 52 gives power to an endorser to insert in the endorsement by express words a stipulation excluding or limiting his own liability to the holder by making such liability or right of the endorsee to receive the amount due thereupon and upon the happening of a certain event, although such event may never happen. So a conditional endorsement simply means the endorser can include or introduce certain conditions in the endorsement where he makes it to the endorsee. Okay, condition endorsement can be achieved by an endorser in any of the following ways. Sans recourse endorsement, by excluding his liability. Example, the holder of a bill may endorse it thus: pay A or order without recourse to me, or pay A or order sans recourse, or pay A or order at his own risk. In this case, the holder does not incur any liability on the bill as the endorser. So conditional endorsement means the person who is endorsing it tries to remove or negate his responsibility on or liability on the bill of exchange. So if you see sans recourse endorsement means he will endorse it to someone else but without recourse to the person who has endorsed. It is the risk of the person to whom the bill has been endorsed. Please take a minute, go through this and then we proceed. Take a minute, go through this. Okay, now liability dependent upon the contingency. By making his liability dependent upon a happening of a specified event, which may never happen. In such a case, the liability of the holder as an endorser arises only upon the happening of the event specified and is extinguished if the event becomes impossible or the conditions specified are not fulfilled. But the endorsee can sue the prior parties before happening of that event. So in case, now again, a conditional endorsement can be made by the endorser where he puts a condition that his liability will occur only if certain future uncertain event happens, and that future uncertain event may actually be impossible. So in short, he's actually trying to say that I'm not liable for the endorsement or the bill. Okay, once I've given it to you, it's your responsibility. But the endorsee can sue the prior parties before happening of the event. So if a person is a holder of an instrument and not a maker, and the endorsee can go ahead and file a case against the people prior to the endorser who have endorsed the bill. Okay, a facultative endorsement. In it, the endorser by express words abandons some right or increases his liability under an instrument. For example, the holder may waive presentment of the instrument for acceptance or notice of the dishonor by the holder. An endorsement pay a order, notice of dishonor waived is a facultative endorsement. Okay. Sans phrase endorsement, where the endorser does not want the endorsee or any subsequent holders to incur any expenses on his account on the instrument, the endorsement is known as sans phrase. That means this is also again a conditional endorsement where the endorser does not want the further endorsees to incur any expenditure on his behalf. So he says it is an endorsement in sans phrase. Take a minute, go through this, and then we proceed. Conversion of endorsement into blank into a endorsement into full. Now we saw what is an endorsement in blank and an endorsement in full. An endorsement as blank is where the endorser just put his signature and does not mention the name of the endorsee, whereas an endorsement in full is where the endorser mentions the name of the endorsee as well as puts his signature. So now we see how to convert an endorsement in blank into an endorsement in full. The holder of a negotiable instrument endorsed in blank may, without signing his own name, by writing above the endorser's signature a direction to pay to any other person as endorsee, convert the endorsement into blank into an endorsement into full, as the holder does not thereby incur the responsibility of an endorser. All right, now let's look at this. Okay, now A issues a check to B. Okay, so A is the holder. B, oh, I'm sorry, I'm sure you can't see this. Okay, just one sec. Okay, now let me give you an example for the first case. I hope you can see this. All right, interesting concept. Now A issues a check to B. So B is the holder. B gives a blank endorsement to C. That means he just signs it and he does not say anything else. Now C has two options. Either C can put in that blank endorsement pay C or order and become the holder of the instrument. Or if C does not want to have any responsibility of that instrument, C can simply put D's name as pay D or order and give that instrument to D. So here, if you see, there is an endorsement directly. A blank endorsement by B has been converted as a full endorsement in favor of D without C coming into the picture. So in this, what has happened? C's responsibility has been waived off. And that is how a blank endorsement has been converted to a full endorsement. All right. Any questions? Please ask me. According to section 55, if a negotiable instrument after having been endorsed in blank is endorsed in full, the amount of it cannot be claimed from the endorser in full except by the person to whom it has been endorsed in full, or by one who derives title through such a person. Now, if an endorsement has been converted from blank to full, then only the person in whose favor the endorsement has been converted into full can claim the full amount and no one else. Let's take an example. A is the payee holder of a bill. Okay, so here we see like how B got the check, A also got the check from someone. A endorses it in blank and delivers it to B. B endorses it in full and orders it and gives it to C. Okay, C without endorsement transfers the bill to D. D as the bearer is entitled to receive payment or sue the drawer, acceptor or A who endorsed the bill in blank, but he cannot sue B or C. C can sue B as he received the bill form by endorsement in full. If, however, C instead of passing the bill to D without endorsement passes it by regular endorsement, D can claim against all prior parties. Okay, so let's look at this. Let's try to bifurcate this. Okay, now A endorses in blank to B. Okay, B endorses it in full and gives it to C. So C becomes the holder. Now C without endorsement transfers the bill to D. D as the bearer, remember it is a bearer instrument. B is entitled to receive payment or sue the drawer. That is a drawer or acceptor or A up till here. Okay, who endorsed the bill in blank. A is the one who endorsed the bill in blank. But he cannot sue. So D cannot sue C or B. Okay, C can sue B because B has done a full endorsement. Okay, so C can sue B because he did a full endorsement. However, if C instead of passing the bill to D without endorsement passes it by regular endorsement, then D can claim against all the parties. If C had just endorsed it in full in favor of D, then D could have done it against all the parties, could have filed a case against all the parties. Alright, so that is what you mean by conversion of an endorsement in blank to a conversion to an endorsement in full. Please take 2 minutes, go through this, and then we proceed. Okay, now essentials of a valid endorsement. Now we look at another feature of essentials of a valid endorsement. We in the previous slides we looked at the kinds of endorsement, conversion of a blank endorsement to full endorsement. Now let's look at the essentials of a valid endorsement. There should be the signature of an endorser. The endorsement must be signed. The endorsement may be made by the endorser either by merely signing his name on the instrument or by specifying in addition to his name the person to whom or whose order the instrument is payable. Okay, pay, see or order. When a bill payable to order the endorsee's name is wrongly spelled, he should, when he endorses it, sign the name as spelled in the instrument and write the correct spelling within brackets after his endorsement. Okay, so in case the endorser puts the wrong spelling of the endorsee, he should correct it and sign there and also put the correct name of the endorsee in brackets. Okay, so the signature of the endorser is very essential. Who may endorse or negotiate? Every sole maker, drawer, payee or endorsee. All of the several joint makers, drawers. Makers means who makes the instrument. Drawer is again the maker of the negotiable instrument. Payee is the holder or to whom the instrument is given. Or endorsee, that means if the payee further endorses it to someone, then the endorsee of a negotiable instrument may endorse and negotiate the same, unless negotiability of such instrument has been restricted. So we also saw the definition of restricted endorsement, right? Or excluded as mentioned. Unless it is a restricted endorsement, then any person, that is the maker, drawer, payees or endorsee, can further endorse a negotiable instrument. Explanation. It is, however, necessary that such a maker or drawer who wants to endorse is in lawful possession of the instrument. So a person, whoever wants to endorse a negotiable instrument, should have obtained possession through lawful means and should have the good title of the negotiable instrument. Let's take an example. A bill is drawn payable to A on order. A endorses it to B. The endorsement not containing the words or order or any equivalent words, B may negotiate the instrument. Okay, so B may further go on and transfer or endorse the instrument. Please take 2 minutes, go through this, and then we proceed. Take 2 minutes, go through this, and then we proceed. Take a minute more. Okay, now we see the third one, the effect of endorsement. The endorsement of a negotiable instrument followed by delivery transfers to the endorsee the property thereon with the right to further negotiation or transfer. But the endorsement may by express words restrict or exclude such right, or may merely constitute the endorsee an agent to endorse the instrument or receive its contents for the endorser, or for some other specified reason. We have seen this in the definition of restricted or restrictive endorsements, where by express words there is a restriction put on the endorsee to further endorse it or collect the money on behalf of the endorser or only for a specified person. Okay, we have seen it under the definition of restricted endorsement. Let's take examples. B signs the following endorsements on different negotiable instruments payable to the bearer. Pay the contents to C only. Pay C for my use. Pay C on order of an account of for the account to B. The within must be credited to C. So in the first case, it is pay the contents to C only. That means C cannot further endorse. Okay, pay C for my use. That means for the benefit of B only. Pay C on order for the account of B, again for the benefit of B only. And the within must be credited to C. Again, C cannot further endorse. So if you see in all these four cases, it is restricted. Okay, the right of C to further endorse is restricted. These endorsements exclude the right of further negotiation by C. That means pay C. In the first case, you have to pay C. In the second case, the B pay C value and account to the Oriental Bank. Pay the contents to C. Bring part of the consideration in a certain deed of assignments executed by C to endorse on other parts. These endorsements do not exclude the right of further negotiation by C. Okay, now go through this, take a minute, and then we proceed. In these three cases, what we see, pay C value and account with the Oriental Bank, pay the contents to C, bring part of the consideration, being part of the consideration in a certain deed of assignment executed by C to endorser and others. Now these, if you see, they do not exclude the right of further negotiations, and C can further negotiate and transfer and endorse these negotiable instruments. Please go through this, take a minute. Take a minute more. Now, endorser who excludes his own liability or makes it conditional. The endorser of a negotiable instrument may, by express words in an endorsement, exclude his own liability, make such liability or the right of the endorsee to receive the amount due thereon dependent upon the happening of a specified event, although that event may not happen, and where the endorser so excludes his liability and afterwards becomes the holder of the instrument, all intermediates endorsers are liable to him. Now there might be certain cases when an endorser endorses a negotiable instrument to someone, he can, by expressly writing behind it, remove or exclude his liability, or he can put a condition in which the endorsee will get the money, and that condition may or may not fulfill. Okay, so in these three, so it is possible for the endorser to do all this. And when the endorser becomes the holder of that negotiable instrument, finally after going around, then he is, all the intermediary endorsers are liable to him. Let's take an example. The endorser of a negotiable instrument signs his name, adding the words without recourse. Without recourse matlab, the person, the endorsee, cannot come back to him for any liability. Upon this endorsement, he incurs no liability. So in case that bill of exchange or bill of exchange does not go through or it bounces, then the endorsee cannot put the liability on this endorser, but he has to go before that. Okay, now let's take another example. A is a payee and holder of a negotiable instrument. Excluding personal liability by an endorsement without recourse, he transfers the instrument to B, and B endorses it to C, who endorses it to A. A is not only reinstated in his former rights, but has the right of an endorsee against B and C. Alright, so in this case, A is a payee. Okay, so he got a check from someone and he was the holder of the negotiable instrument. Then he wrote behind the words without recourse and he transfers the instrument to B. So he's removed his liability. B further endorses it in full and gives it to C. C again endorses it in full and gives it back to A. So it's come back to A. Now A is reinstated in his first position, but he has the rights of an endorsee against B and C because B and C have endorsed in full and it's come back to A. So A has a right to sue B and C, but B and C do not have a right to reinforce the liability of A because he says without recourse. Okay, please take a minute, go through this, and then we proceed. Take a couple of minutes, go through this. Take a couple of minutes, go through this, and then we proceed. Okay, now we go to instruments obtained by unlawful means or for unlawful consideration. When a negotiable instrument has been lost or has been obtained from any maker, acceptor, or holder thereof by means of an offense, fraud, or for an unlawful consideration. Okay, so let's say a negotiable instrument, a check was lost, or a check has been obtained from the maker of the check or the acceptor of the check or the holder of the check in due course by means of an offense. You've stolen it, or by fraud, or for an unlawful consideration, that okay, you give me this thing and I'll go and murder someone for you, then that is an unlawful consideration. No possessor or endorsee who claims through a person who found or so obtained the instrument is entitled to receive the amount due thereon from such maker, acceptor, or holder, or from any party prior to such holder, unless such possessor or endorsee is some person through whom he claims was a holder in due course. Okay, so if any person gets a check which is lost, or he obtains the check from the acceptor, maker or holder by an offense or fraud or unlawful consideration, then he cannot claim the amount on that check from any of its previous holders or from the original maker, acceptor or holder unless and until he proves that he was a holder in due course. That means there has to be an endorsement, there has to be something which says that he's a holder in due course. In case he fails to establish such a thing, then he will not get the amount. Then the instrument acquired after dishonor or when overdue. The holder of a negotiable instrument who has acquired it after dishonor, whether by non-acceptance, non-payment with notice thereof after maturity. So any person who becomes the holder of a negotiable instrument which has been dishonored, okay, due to non-acceptance, non-payment with notice thereof and after maturity, okay, then they have no title to that negotiable instrument. Now we would like to I would like to stop with this session today, and before I can wind up the session today, I would like to bring your attention to certain matters, and for that I'll have to go to the beginning. So just give me a minute. So I hope you found the session useful today on the Negotiable Instruments Act Part 2, where we discussed the various negotiations, the kind of endorsement, what do you mean by an endorsement, the way in which a negotiable instrument can be transferred from one person to the other, and I hope you found it useful. All right, so please do give me your feedback and ask me any questions you may have. And with that, we are ending today's session. But before I go, there are certain things that I need to recap you with. Like we spoke in the beginning, Let's Crack CA Exams is a vertical of Unacademy, which is India's largest online learning platform, which provides you top educators, quality content, and overall a great learning experience. So I also welcomed you, and I told you I welcome you once again and say let's crack CA Exams with Unacademy, India's largest online learning platform. This was a little thing about me. Now, like I told you, Unacademy is present on YouTube, which you're watching today. It's also present on the Unacademy Learning app in the form of special classes, which contains important topics and important discussions which will help you in your preparation for the CA Foundation and Intermediate examination. So I request you to view those special classes by downloading the Unacademy Learning app and registering on it using a mobile number and an OTP. And most importantly, Unacademy also has this platform through which it enhances and accelerates your preparation for the CA Foundation and Intermediate examination. That is the Plus platform of Unacademy, which is a payment-based subscription model. So what do you get on the Plus platform of Unacademy? You get daily live classes where you get to chat with your educator, engage in discussions, ask your doubts, and answer polls, all while the class is going on. Yes, you do not need to wait for a special time. You do not need to wait for the weekend or an appointment or the end of the session. You can, as simple as raise your hand, put in your question, put in your doubts, and your educator will be more than happy to clear it. Or if you have any other discussions related to the topic, you can also do that on a real time and on a live basis, just like as if the educator is in front of you in a live classroom. The second important reason why the Plus platform of Unacademy is suggested and encouraged to you is the Plus platform of Unacademy conducts live classes and quizzes at regular intervals to help you evaluate your preparation, and also various mock tests and quizzes are conducted to get detailed analysis of your performance. By detailed analysis of your performance, it is derived that we find out your weak areas, your not so strong areas, and your strong areas, so that when you're preparing for the examination, you can spend a lot of time on your weak areas, a little lesser time on your not so strong areas, and even lesser time on your strong areas, so that it results in minimum wastage of time and maximum utilization of time. The third reason why the Plus platform of Unacademy is important and is recommended to you is because it provides structured courses. The courses provided in Plus platform are in line with the syllabus of your respective examinations, and once you finish a course on the Unacademy platform or the Plus platform of Unacademy, you can rest assured that you've completed the syllabus for the examination without any important or major topic being missed out. All right, so in that way, the courses provided by the Plus platform of Unacademy are structured. And lastly, and most importantly, the one subscription to the Plus platform of Unacademy gives you unlimited access to the live and recorded courses of the favorite topics of your favorite educators to watch from the comfort of any of your devices. You do not need to be at home. You do not need to be in an office. All you need is an internet connection or a data plan, and you can view those sessions on your mobile phone, tablet, laptop, or desktop. Okay, and you can, and the most important thing is from anywhere and anytime, 24/7. There is no restriction. All right, so I really recommend, and I hope, I encourage all of you to get onto the Plus platform of Unacademy and make use of this opportunity as much as possible in order to enhance and accelerate your preparation for the CA Foundation and the intermediate examination. Like I told you, there are special classes and there is a Plus platform, and both these platforms or both these facilities are available to you on the Unacademy Learning app. Okay, for those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much for your support, and I request your support in the future as well. And for those of you who have not downloaded the Unacademy Learning app yet, I request you to go to your Play Store in your mobile phone, download the Unacademy Learning app, put in your mobile number, you will get an OTP. You need to register on it using the OTP and you're done. It's as simple as that. So once you've registered on the Unacademy Learning app using the OTP sent to your mobile, you get access to all the special classes that have been conducted there by various top-end educators, and also you get access to the Plus course of Unacademy, which will help you in accelerating and enhancing your preparation for the CA Foundation and Intermediate course. There are various special classes also which are absolutely free of cost, which you can view, which are on topics contained in the syllabus of your examinations and which will help you in your preparation. So even I have taken a lot of special classes on the Unacademy Learning app platform. So please do go there and look for Prathik Gupta, Prathik, that is Prathik Gupta. Go to my profile, click on the follow button, okay, and also go through all my special classes that I've taken there, ranging from Companies Act, Indian Contracts Act, Partnership Act, Limited Liability Partnership Act, revision test papers, and many more. All right, so I hope you find them useful. And also the Plus platform, which is a payment-based subscription model for you to subscribe. More about it on the next slide. Like I told you, the Plus platform is a payment-based subscription model of Unacademy. So the CA Foundation and Intermediate subscription packages contained in the Plus platform of the Unacademy domain are as follows. The packages for the CA Foundation and Intermediate subscription are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package will normally cost you rupees 3,500. The 3 month package will cost you rupees 8,750. The 6 month package will cost you rupees 14,000. The 12 month package will cost you rupees 17,500, and the 24 months package will cost you rupees 21,000. While you choose the package of your choice, please do not forget to use the code Prathik to get a discount of 10% on the listed price. I repeat, Prathik to get a discount of 10% on the listed price. So the after discount price of the various packages are: the 1 month package will cost you rupees 3,150. The 3 month package will cost you rupees 7,875. The 6 month package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see, immediately you get a savings of 10% by using my code, which is Prathik, Prathik. Okay, so I request you to use this code while making the payment. Now, while you're free to choose the package of your choice, I personally would recommend to you to go for at least the 12 months or the 24 months for the following reasons. If you see the per month cost of the 1 month package and the 12 months and 24 months package, it's almost less than 1/3 of the cost of the 1 month package. So this gives you great savings in terms of your cost. And secondly, and most importantly, as the CA Foundation and Intermediate course is being provided to you in one package, it makes sense for you to go for at least 12 months, because it normally takes about 12 months for you to prepare and clear the CA Foundation and the Intermediate examination. So if you're getting a package for the entire duration of your CA Foundation and Intermediate course at a very good price, at a cost-effective price, it makes sense for you to go for the 12 months, okay, if not the 24 months. But while making your choice, again I repeat, please do not forget to use the code Prathik to get a discount of 10% on the listed price. So that will bring you 10% discount instantly, as well as then the per month cost also comes down. So I really hope and request you to get onto the Plus platform as soon as possible and make the most of it. And with that, just 1 second. With that, I would like to end today's session for Let's Crack CA exams with Unacademy, India's largest online learning platform. And I hope you enjoyed today's session and could benefit from it. I had a great time in taking this session for you. In case you have any feedback or questions, please do drop in a message and I will get back to you with the answer. Thank you so much. It was a pleasure taking this session for you, and I will see you soon. And for the benefit of the audience, I will be taking a lot of special classes tomorrow, day after tomorrow, and on Sunday on the Unacademy Learning app. So I request all of you to be there and do attend my special classes and benefit from it. Thank you so much, and I will see you all soon. Good night.